During the week, I put the call out to you to ask any questions that you might have when it came to insurances so that I could put them together in a video and answer some of these directly for you. Given I'm such a social media noob, I really struggled to get 5 questions together, but fortunately I was saved with a couple of questions from you guys. So to make up the 5 questions, I went and grabbed some of the most commonly asked questions that I could find online, and I thought I'd answer those for you as well. Hi guys, welcome back to the channel. My name's Craig and I'm a self-confessed insurance nerd. And on this channel, I try and humanize the world of insurance to provide peace of mind for you and your family. So as I mentioned, I struggled to get 5 questions from you guys when I asked for help in making this video. A big thanks to Terry and to Jeff, who saved me from internet tumbleweed, if you like, by sending through those questions. So let's jump in as I knock over 5 common questions when it comes to your personal insurances. Now, firstly, we've got the question from Terry, which is, what is the biggest and or costliest mistake you see most consistently when it comes to insurance, and how can this be avoided? I always think it's difficult to come up with one answer when we're asked about the most costly thing. And for me, I think it comes down to the fact, I'm going to look at those of you who have insurance in place at the moment. Now, if you've got insurance in place, the most costly thing that I see people make is to not ever revisit or recheck the insurances that they have. And the reason that this is such a big deal is that by not revisiting and checking in on the insurances that you have, whilst we're young, the price of insurance is relatively cheap. Those same levels of cover as we get older become a lot more expensive. And one of the things that I see commonly is it may have been a number of years since you had a look at your insurances. Let's face it, it's not always front of mind. And in that time, the premiums have got a lot higher than they were when they first started out. And that feeling of frustration when you see how much money has been paid in that period of time for those insurance policies that you haven't needed to claim on becomes one that's quite strong. And what happens when this frustration is strong, we turn our frustrations on insurance in general, as opposed to taking that step and taking a little bit of responsibility for the fact that we hadn't looked and checked in on these policies throughout the journey. The reason this is so costly is those premiums add up, and it does definitely feel that you may have wasted some money on insurance if you don't come back and adjust these and confirm whether or not you actually need these levels of cover throughout that whole period. The second question comes from Jeff, who asked, which of the personal risk insurances should I get first? To answer this question, I think it depends on the life stage that you're at when it comes to looking at insurances. And this can be broken down into 3 broad categories. Number 1, pre-kids. Number 2 is when you have a family. And number 3 is post-kids. So let's have a look at pre-kids first. I believe before kids, you can afford to be really selfish when it comes to your insurances. And what I mean by that is I think that life insurances and those sorts of policies that make other people rich are the sort of policies that you can avoid and you can afford to be selfish with. So if you're in this first stage before having kids and before having a family, my suggestion is to look at the selfish insurances, which are the income protection and the trauma cover. Stage number 2. So this is when you've got a family, you've got other mouths to feed, and you've got other responsibilities. In this stage, it has to be a top-up between life insurance, making sure that your family never has to worry about money should anything happen to you, and secondly, income protection, which is the fuel to all of your future financial goals. So for me, if you're looking at which of the insurances is most important in this stage, I think it's a definite toss-up between the life insurance and the income protection, and that would depend heavily on whether or not you're the main income earner for the family or not. If you are the main income earner for the family, then I would be leaning towards that income protection being the most important part. So let's have a look at stage number 3, which is post-kids. So your family's now grown up, they're no longer financially dependent on you. When you're looking at this stage of your life, I think it's again dependent on your situation. Now the biggest variance I would see here is how big is the mortgage on your home. So let's say that you're the major breadwinner, you've got a big mortgage and your partner would struggle to pay for that mortgage should anything happen to you, then I think life insurance is really important. If on the other hand, you've got a manageable mortgage and you are still that major breadwinner, then I would think that the income protection still becomes really important. And the reason for that is that the amount of money that you'll earn between the age you are now and retirement is still really important and still has a large bearing as to what that retirement will look like for you guys in the future. If you're the non-breadwinner and you've come to this stage where the kids have grown up, then I think that the trauma insurance is really important. It's likely that you'll be at an age where things start to fall apart from a health perspective. And in saying this, the trauma insurance can easily be replaced by time money. So you can check out some of my other videos that touches on this. But if you don't have a backup of cash or a lump sum of money that you could throw at any medical issue, then I do think the trauma would be the most important one for you to consider at the moment. Now on to some of the common questions from the internet. Question number 3, I have insurance with my super fund. Isn't that enough? Now this has to be one of the most common questions or comments that I get when I'm speaking to you for the first time about your insurances. Now yes, most of us will have some insurance through our super funds, and the issue is that it could be enough or it also may not be enough. So the important thing to work out first is how much insurance do you actually need? There's a number of ways of doing this. Your super fund itself will have a calculator that you can plug in all of the relevant details to you, and they will come back to you with an approximate amount of insurance that you'd need based on similar people in your circumstances. There's also calculators on the government's Money Smart website, which can do the same sort of thing. Or alternatively, we've built our own quiz that you can find the links in the comments below. To answer the question of whether or not you have enough or not, you first need to work out how much do you need. The second thing then comes down to, do you have that amount of cover listed in your super fund? Most typical super funds will only have 3 types of insurances that they can offer: the life, the total and permanent disability, and the income protection. The fourth of those insurance, the trauma insurance, it would not be one of those policies that your super fund could offer. Now, I've made other videos that looks at the quality of the products that are available through super, and typically you're able to find a better quality product in the rest of the market. And believe it or not, these better quality products elsewhere are typically cheaper than what you can find through your super fund. Now, often the big concern comes that you really like your super fund and you've had good performance, or you're really happy with it nonetheless. The good news is that even though you may apply for your insurance elsewhere, you can still fund these premiums from the super fund that you like without having to change any of the benefits there, therefore being able to access whichever insurance policy you like and maintain whichever super fund you like as well. Question number 4, why do we hear so much about insurance companies not paying claims? Now, I think this is a question that needs to be answered in a few different ways. Now, firstly, I think we need to separate the different types of insurances, because when I hear people say this to me, it's typically you've had a bad experience with a travel insurance or a car insurance policy or those sorts of things that aren't one of the policies that we talk about on this channel, which are the personal insurances. ASIC, who are one of the governing bodies in the insurance space, brought out a report, and the report showed that over 90% of all claims that were submitted, irrespective of the channel that they were submitted to in the personal insurance space, were actually paid out successfully. And what I mean by different channels, you could either have direct insurance, meaning that you bought it directly from the insurance company. They're the types of things that you'll see on television. There's the group policies, which are typically the ones that are owned through your super fund, like we spoke about before. And then you've got the retail insurance policies, which are typically purchased through an advisor like me. What that report showed was that irrespective of those channels, the claim statistics are really positive in your favour as the person that's applying for those claims, being over 90%, as I mentioned before. The second thing to note is that when we're reading online reviews for insurance company, it's very rare that people jump on insurance companies and say something positive. So what tends to happen is that we only tend to hear from those people that have had the poor experience when it comes to claims when we're reading about these insurance companies online. Now, it was only the other week that OnePath, one of the insurance companies, was on A Current Affair, and those things again tend to happen when there's a case that doesn't go the way of the person that's claiming. Again, it's very unlikely that A Current Affair are going to pick up a good news story about the insurance company, so we only tend to hear when we see these bad cases go on. With the Royal Commission that came out recently, we also heard some horror stories that came through. I'm not trying to say that they don't happen, but what I'm trying to explain is that they are actually the statistical minority when we're looking at those overall claims for the industry as a whole. Question number 5, how much is this going to cost? Now, when it comes to price, you can spend as much or as little as you want when it comes to insurance. There's a number of factors that impact on the cost of the insurance. Firstly, how much you apply for, which is the obvious one. Secondly is age. With the older we are, the more expensive it becomes. Whether or not we're male or female has bearing on price, whether we smoke or don't smoke, and what our occupation and pastimes are, and those sorts of things, which paint a risk profile when you're applying with the insurance company. As a rule of thumb though, if you looked at a range of between 3 and 5% of your gross family income, and you look to invest that towards this defensive strategy of insurance, that would be a really good starting point for you. Now, obviously, that's a general guide, and if you're older or younger, those numbers are going to differ significantly. But as a rule of thumb, if you started with that as a range, that would give you a pretty good indication on some of the pricing. So this is the first on a different style of video where I asked some questions of you that I could then answer on your behalf. And to be honest, it was really fun to make. So next time when I do put the call out, hopefully I'm not met with so much internet tumbleweed and we get a few more questions back so I can help you and assist by answering some of your specific questions as well. Now I did touch a little bit on claims in this video, and I've made another video that looks at the chances of claiming on each of these different types of policies. It's a bit lighthearted and looks at some other things that have the same statistical likelihood of these insurances happening to you. Check it out here and I'll see you over there.